Crypto's ripping today. Bitcoin, Ethereum, the tokens, everything's catching flow off the Clarity Act headline. And every channel is showing you the green candles. But the institutions moving real money aren't watching that screen. They're watching a second one, and it explains the first. Here's the split. Retail watches the candles. Institutions watch the bond market. Same event, two completely different reads. And the institutional one is the story nobody's telling you today. So let's read the second screen. Last week, the softest CPI print since 2020. Inflation cooled, and the 30-year Treasury didn't move, still pinned above 5%. Think about that. The best inflation news in years, and the long end refused to rally. Even Warsh said the soft print wasn't mission accomplished, his words. The bond market is saying it won't fund a $39 trillion deficit at these prices. The old buyers and foreign central banks are stepping back. Someone has to replace them. And that is why crypto is bid today. Clarity builds the federal framework these dollar tokens run on, and regulated stablecoins are backed by short-term treasuries by design. The reserve rules require it. So every regulated dollar token minted becomes a direct bid for U.S. government debt. Retail and corporate cash routed straight into the thing the bond market won't buy. That's why the real institutional trade isn't the coins, it's the rails. It's why tokenized real-world assets are exploding. The candles are the symptom, the handoff is the story, now the honest counterweight. This week, the two most powerful men on Wall Street went on record bullish. Solomon sees a tech supercycle. Fink says technology is expanding margins. Fair case, but notice what neither one mentioned. The long end, the deficit, the 30-year at 5%. That silence is the tell. Here's what I'm actually watching. Clarity isn't law. Congress has until the first week of August. A vote before recess is likely. The bill passing this year is a coin flip. Watch the bill text and the floor vote. So while retail chases candles, the desks are positioning around yield. Smart money's keeping powder dry. That's the read. I'll be here when it breaks.